Hey guys, so it's Friday and we are going to go over news you may have missed this week. And it's been plenty of news, but I wanted to kind of narrow it down to some things that I want you to keep on your radar going into next week and honestly for the rest of the year. So to start it off, we're looking at Netflix. Netflix has announced a 10-for-1 split. You're new to the market or what a split is, it's just simply when a company has decided to make its stock much cheaper. Right now, Netflix is sitting at $1,118. That was the close on today, and it's up almost $30 on today alone. Okay, but in the aftermarket, after hours, we're sitting at 1,120. So when they do a stock split, this will simply be them cutting the stock in half by 10. So this will easily be, well, let's just say the stock is even $1,000 once the stock split takes place on November 10th. That's about $100 per share. So as of right now, it says Netflix announces a 10-for-1 stock split as the company aims to make the stock more accessible for employees. And not just their employees, but of course, as retail investors, it makes it much, much easier for us to buy and hold 4 shares on a company versus paying $1,000 per share. Let's read really quickly into the article. Netflix on Thursday announced it will split its stock 10-for-1, meaning Netflix shareholders will receive 10 shares for every 1 share that the company they currently own. Netflix stock, as a result, will trade at 1/10 of its current price. Shares closed at $1,089 a piece on Thursday. So this is from Thursday, and as of right now, we're sitting at over $1,100 as of close on this Friday. Okay, so that's just something to keep on your radar. Now, something I do want to make clear, because I was asked about this by a student that's asked me, if I get into a put option for Netflix and the stock splits from 1,000 all the way to about $100 per share, will this make my option extremely valuable, and could this result in some massive profits? And the answer to that is no. I used to think the same thing when I was seeing stock splits happening when I first started trading, was that if I got into a put option when a split was announced and then that thing goes from $500 to like $50 a share, I thought that my option will make it seem as if the stock went from 500 to 50. That is not the case. Not only will your shares and the stock costs or the share costs be adjusted, your option will also be adjusted according to the split. And so the value will still remain the same, and it will not have some massive surge going from wherever it was all the way down to the new share price. So don't think hopping into puts on Netflix close to the stock split is going to result in you having big trade here with your options and a put. That's not how it works. Everything across the board will be adjusted. So don't do it. Once the stock split happens, we will likely see a massive demand for people now being able to really load up on Netflix at $100 or so per share versus $1,000. So if you do get into call options, take into consideration that split, because we can see a massive demand and it could push the stock up. Not saying hop into calls just because, and definitely not saying hop into puts, but just watch it around that time because the demand could potentially surge, which of course could cause the options to surge because it's much cheaper. So keep that on your radar going into next week, as well as going into November 10th when the split actually takes place. Second thing on the list is NVIDIA. Now, NVIDIA has been passing out bills and partnerships like prison commissary. They've been partnering with everybody. They had the most unexpected partnership with Nokia. Now, let me put this out there because most people think that Nokia just makes phones, or they're just known for making phones. Nokia is an equipment maker. Okay, they go beyond their smartphone. If they were solely relying on smartphone sales, Nokia probably wouldn't still be, I would probably say, an operational company, but they do more than smartphones. Okay, this partnership with Nokia and NVIDIA is going to be tied to them creating 5G and 6G equipment using the NVIDIA infrastructure. And even though Nokia I guess I would say it's like an uncanny partnership or just an unexpected one. It makes sense when you understand what Nokia makes and what they do on the back end. Okay, they are known for equipment making, the towers. They are known for telecom infrastructure and all of that on that back end, not just smartphones. So in a sense, the partnership makes sense. It just may not be one you may have expected to see on the list because your mind's probably going straight to the Nokia phone. NVIDIA has also partnered with Palantir, with Hyundai. They even have a partnership with South Korean government. They are going across the board with their partnerships, and NVIDIA is just not the only one to watch though. Also, it means you get into kind of looking at a long-term play with NVIDIA, but you can also look at who they're partnering with to get into some more affordable either trades or investment to kind of grow along with this partnership. And Palantir, Nokia are two on my list. I've already been holding shares in Nokia since 2020, just holding them and never sold. So seeing that rally that took place with it was very unexpected, as well as that NVIDIA partnership. So keep them on your radar. I'm waiting for Nokia to come back down a little bit to kind of average down, get some more shares, but you can definitely watch it because this demand as well as this volume has been picking up ever since this NVIDIA partnership took place. We know that NVIDIA has invested $5 billion into Intel as well. And before we get into the next set of news, NVIDIA CEO and Trump were supposed to meet. Now, my thing was when Intel CEO went to meet with Trump, what happened? They left with the US government now owning 10% of Intel. I was definitely wanting to see if NVIDIA was going to be giving a percentage of the company to the US government, or were they going to take part in a Stargate project, or this whole conspiracy around Trump building a ballroom, which is not really a ballroom. So he's building something else, which is either a hyperscale data center and a supercomputer under the White House. That's just a TikTok rumor, but who knows? So there's a lot of things that I was looking at, but I was definitely wondering if NVIDIA would give up ownership in the company to the government, U.S. government. Is it too late to tell? I would say, no telling what that conversation was about and when it could come out. So just something to keep on your radar with NVIDIA. Kathy Woods. Kathy Woods is the CEO of ARK Investment. And Kathy Woods, alongside Warren Buffett and a number of Congress members, are people that I follow. When I talk about following the money to where they're investing, whether we're getting into shares ourselves or option trades, Kathy Woods is one of those people on my list. Okay, they just recently announced today that they invested $30 million into Block. Block is Square, Cash App, all of that. 30 million there. And so I was looking at it, but I haven't really got any shares on that one. Haven't traded Block in a while, but that $30 million going there is probably something worth keeping on the radar going into next week, considering the news just came out today. ARK is an ETF. Okay. They have three different ones. They have ARKK, ARKW, and ARKF. These are the three ETFs under Kathy Woods, where they use to dish out their investments and all of the companies that they hold. And if you're using Robinhood, Webull, whatever platform you're using, you can see somewhere under the option detail all of the companies or the biggest companies that are within their holdings. And you may see some like Tesla, Palantir. You may even see Roblox. You'll see Block. You'll also see, if I'm saying this right, Intellia Therapeutics is another one that they recently invested in. And so you definitely want to keep them on your radar going into next week to kind of see what the reaction looks like to the news. And I will say this, they have been cutting or trimming their position sizes in AMD as well as Palantir. So they've been trimming, but I'm mostly looking at where she's been putting the money. She's also invested $3 billion into Amazon. I think $2 billion into Alibaba. So she's trimming some positions as well as adding to others. She also added Archer Aviations to that. Someone brought that up to me, and I was reading through her new list of stocks she's added to her portfolio, and Archer was one of them. So that's another one to keep on your radar. One other, DraftKings. I haven't traded DraftKings in a while. They invested in DraftKings, but they were also cutting back on Shopify. Now, I kind of assumed that that may have happened because of this whole thing with Trump and Canada, where they were threatening to cut off all trade with Canada or trade talk. And Shopify is a Canadian-based company, and that news kind of hit around the same time the Trump and the Canada trade news kind of hit. So that could be why. Possibly there wasn't a whole lot that I was reading on why she trimmed her position there, but just something to think about. Now, another thing that I definitely want you guys to take with you into the weekend. JP Morgan has announced that they will allow Bitcoin and other crypto as collateral to obtain mortgages, to obtain loans, and anything else that would require you needed some sort of collateral for their borrowing product. So that's definitely something to watch. I kind of saw that and thought we would see like this massive shift in Bitcoin, but then at the same time, I said we probably wouldn't just yet. But they did announce that they will allow that to be used as collateral. And speaking of Bitcoin, you have Open Door, which is an online real estate buying platform. They stated that they will prioritize allowing you to purchase with Bitcoin. So that just kind of added into that crypto space, and you can kind of see how companies and banking products are adding this on board. And so the more I would say banking products begin to adopt this, let's just say the other banks, Bank of America, Wells Fargo, Truist even, they start to allow you to use your crypto as collateral for your borrowing effort. This could definitely shift the crypto up a little bit, and you will kind of probably see that space start to rally a little bit. So keep it on your radar. Keep JP Morgan, of course, yeah, but kind of keep the Bitcoin and the crypto on your radar as well. The market has not reacted to some news the way that we would expect it to. When Trump announced that they were lowering the tariffs on China, I think it's for 1 year, the market would have normally rallied, but it didn't. Then we get the interest rate cuts, and we would probably expect to see a little bit of a rally. Nobody was really doing anything. I'm like, okay, well, that wasn't really the reaction that people were looking to see. But one thing I was highly, highly expecting that I did get into some puts when the news hit was the financial sector to come down. Because think about it, when the interest rates are cut, that means borrowing is cheaper, the interest rates are lower, right? So when that happens, you can kind of see people kind of dish away from the finance industry just a little bit, where you're seeing banking products down or fintech companies down, because they, I'm gonna say fully rely, but high interest rates means more money for the banks for certain financial products. So seeing that completely red like that was expected. So that was opportunity there. Even though the market didn't fully rally, I'm like, well, the reaction ain't what we expected it to be. I wasn't too heavy in the market on that day, but I said, you know what? This ain't doing what we probably expected to do. Let's go look over here, the finance sector. And it was exactly as I expected it to be. So sometimes certain news, I think we're getting so, I don't know the word for it, but it's just like we get this trade news, these tariff news, market rallies, we get this bad news. Oh, Trump's increasing tariffs on China by 200%, and the market just plummets. He announced a bit of a truce for a year. Nothing really happened. So you just kind of have to react to what the market gives you, and don't just jump in and make assumptions. All right. So these are just some things that I want you guys to keep on your radar. Some news that I want you to take the time to do some of your own research. Look more into some of NVIDIA's partnership. I'm watching that heavily to see where it leads me. Kathy Woods is one of those people I like to follow, because I like to see where they're flowing their money. I have shares in all of their ETFs. So not only am I investing in those ETFs, I don't really trade them much. I've done it probably maybe once or twice. My main thing is on holding them and allowing them to grow. But I like to see where she's dishing her money so I can follow suit, or also look to get into trades for these companies. Okay, so keep that on. Once Netflix come down, this is the perfect opportunity to get some shares. Even if you can't afford a full share, hey, you can get partial shares, $25 here, $50 there, and at some point, you will begin to grow those shares into full shares, and we regrow with Netflix back to potentially $500 stock, $1,000 stock again, who knows? But you're getting in and a great, great opportunity. So this was just some news that I want you guys to take with you into the weekend, and with that, I will see you guys in the next one.